Well, I think the quick answer is I think that they will take a little longer to move on it. But I think the longer answer really has to be saying it's not about tightening monetary policy on the basis of a strong economic growth. This is really about a decision of when you move away from this ultra low level of interest rates back to a more normal level of interest rates. So the problem you've got at the moment is you've got two completely different markets operating. You've got the real world where people borrow at 3 or 4% probably minimum, and that is where credit and the normal, what we'd understand of the use of Fed funds. But then you've got this sort of extra world, which is where people can borrow for almost nothing. If you're a bank or if you've got ability to repo, sell stuff back to the central bank, you can borrow for almost nothing and buy other financial assets. So we've got this weird situation where the real determinant for the Fed of what they do in terms of the ultra low level of interest rates is to try and limit the amount of damage that is possibly being caused by this financial market, the carry trades and the leverage that's going on in this kind of separate world. So the data coming from the real economy isn't going to be the key decision about when you stop this ultra cheap money experiment. It's going to be when you fear that the actual markets themselves are going to cause damage once again with too much leverage, too much sort of spread or carry trades within the markets themselves. And that's the thing they're looking at much more carefully. Well, I think a lot of what we've seen in the last couple of years is people got very excited about Japan and reforms, and there was a panic, and that was a big fund flow because people had been underweight. They then got very excited about China and the reforms last November, but there wasn't such a big fund flow because the index weight didn't really make much difference, but there was a bit of excitement and then they got bored. Same people have got very excited about India and Indonesia. Now, of course, Indonesia is a very small market. India is a bigger market. But again, the big institutional investors have not moved into India for all sorts of reasons. But there's been good fund flows, particularly via the ETFs, to chase the whole Modi story. I think what's happening now is that the big international investors are looking at China, even though it's not a big benchmark story. You're getting more and more people saying, we need to understand what's going on there. They're not buying it yet, but in terms of the actual attitude, in terms of the research and investment that's going into the area, I'd say that's where most of the big investors are concentrating their attention right now, if not necessarily they're buying.